Economic substance requirements are now the law of the land in the Republic of Panama. Therefore, for the first time in history, some Panamanian entities may face a new 15% tax on foreign passive income starting in tax year 2027. Now, what about you? Is your entity within the scope of this new law? Will you have to show economic substance in the Republic of Panama? Will you be subject to the new 15% tax? Everything you need to know in this video. Hello, my name is Javier. I'm the tax director here at the Rothbard Group. Let's dive right in. So, the first thing you have to understand is that this new economic substance requirement law is very specific. Only certain precise entities, narrowly defined, are subject to this new law. So I'm going to explain to you the logic behind the law and how to exactly ask yourself the right questions in order to understand whether or not your entity is subject to the economic substance requirements and will be subject to the new 15% tax starting in tax year 2027. Element number one, in order to be subject to the new economic substance requirements, your entity has to be part of a multinational enterprise group, or M&E group for short. Now, an M&E group is defined in the following way in the new law. Number one, there have to be multiple entities linked by ownership or control. Think, for example, a parent company and its subsidiary. Number two, those entities need to be tax residents of at least two distinct different jurisdictions. And number three, the group needs to be structured in such a way that the parent entity is required to prepare consolidated financial statements, or that the parent company would be required to do so if it were publicly traded on a stock exchange. So as you can see, the M&E group definition is very specific, very precise. Not every entity, in fact, I would say only a minority of entities out there even qualify as being part of an M&E group. So the first part of good news is that if your entity is not part of an M&E group, then you simply stop here. You are not subject to the new law. You are not subject to the new 15% tax. You don't need to show any economic substance in the Republic of Panama. Now, for argument's sake, let's say you answered in the positive. Let's say you said, I am a multinational enterprise group. My Panamanian entity is part of an M&E group. In that case, we move on to the following question. Does your Panamanian entity earn passive income? Passive income is defined in the law as dividends, royalties, capital gains, rents, things of that nature that are attributable to capital. If the answer is no, then also a bit of good news. If your entity is part of an M&E group, but it only earns active business income, so no passive income, then the analysis stops right here. You are not subject to the new law. You will not be subject to the new 15% tax. If, however, you answered in the affirmative, your entity is part of an M&E group, and on top of that, it does earn passive income, then we move on to the third question. Is the passive income foreign source? If the answer is no, then again, a bit of good news. You are not subject to the new economic substance requirements, no new 15% tax for you. However, if the answer is yes, so at this point you've answered yes to all three questions, your entity is part of an M&E group, it does earn passive income, and that passive income is foreign, then you are within the scope of the new law. Now, here we have to start a brand new analysis. Now that we know that you're within the scope of the new law, then the question is my Panamanian entity a qualified entity or a non-qualified entity? If it is a qualified entity, it means that it does meet the economic substance requirements as set forth in the new law. So think of things like having adequate personnel in Panama that is properly compensated, having offices, showing that the mind and management, that the decision-making activities take place in Panama. If all of that is verified, then you are a qualified entity. If it is not verified, then you are a non-qualified entity. And why does this matter? If you are a qualified entity, even if you answered all three initial questions in the affirmative, your foreign passive income is still tax-free in the Republic of Panama. Your foreign passive income will not be subject to tax in the Republic of Panama. Only in the scenario that you answered all three questions in the affirmative, the initial questions in the affirmative, and on top of that, you are a non-qualified entity, meaning that you do not meet the economic substance requirements in the Republic of Panama, will you be subject to the new 15% tax on foreign passive income. So as you can see, When you see headlines out there talking about a new 15% tax on foreign income in the Republic of Panama, that is very, very much oversimplified, and it is designed to scare people into believing that Panama is destroying its territorial tax system, when in reality, only very specific entities will be subject to this new regime. So in addition to everything that we have already discussed, I wanted to add some additional pieces of information that I think might be very useful for anyone navigating these new uncharted waters. Number one is that a Panamanian entity is not necessarily a tax resident of Panama. It is possible to have a legal entity formed under the laws of the Republic of Panama, for example, a private interest foundation or a corporation, a sociedad anónima, and not have those entities be tax resident of the Republic of Panama. Now, this can be very powerful because, as you recall, tax residence in multiple jurisdictions is one of the key elements to understanding whether or not you are part of a multinational enterprise group or not. So this element, that you can have a Panamanian entity that is not a tax resident of Panama, can play a key role when planning around the M&E definition. So just food for thought, it could be a very powerful planning tool. Number two, the situation with the economic substance requirements is still evolving as we are waiting for new regulations and guidance from the president. The National Assembly approved the law and has given the president 90 days to issue further clarification. Now, the president cannot modify the law, but the president can dictate how it will be enforced, and ultimately that can also influence how we decide to plan around the law and what the reality of dealing with the law will look like. So important to have that in your radar and under consideration. Number three, there are a couple of exceptions that did make their way into the law. They are very narrow. I don't think they'll apply to many people, but just for you to know, if you're involved somehow in the financial services industry and you are directly supervised by the Superintendency of Banks or the Superintendency of the Securities Market here in Panama, you are not subject to the economic substance law. And if you're somehow involved with the merchant navy, your business is owning and operating merchant vessels, then you are likewise not subject to the economic substance law. Again, very few of us will meet the criteria for those exceptions, but it's good that you know that they are out there. Number four, it is important for you to know that the economic substance requirements may be outsourced in the Republic of Panama. So just like BVI or Cayman, you don't have to yourself establish the offices or hire the people in Panama to meet the economic substance requirements should you be required to even take that under consideration. You can actually just outsource it. So you can hire somebody locally in Panama to meet the requirements, and that is perfectly fine. And last but not least, the other important element that I think is important to mention is that the new 15% tax, when it does apply, it applies on a net basis instead of a gross basis, which, helps you a lot when you're running a business with actual expenses. So, doubtless a difference for the companies that unfortunately are non-qualified entities. There you have it, folks. This was a rundown of the new economic substance requirement in the Republic of Panama. As you can see, the law is very complex. It requires very specific analysis. It requires a multi-step, multi-stage analysis. But the important thing is that ultimately its scope is relatively narrow. You can plan around it, and that means that Panama remains an excellent jurisdiction to form your entities in, be they foundations or corporations. Panama remains an excellent jurisdiction for you to relocate personally. And ultimately, with the right planning, Panama is still a jurisdiction that is vastly more competitive to form your entities in versus, compared to BVI or Cayman Islands or Bahamas, for example. The mere fact that, economic substance requirements only apply to these very specific subset of entities as opposed to every single entity already establishes a major difference between Panama and these Caribbean islands. In the BVI or Cayman, every single entity that is formed is subject to the economic substance requirements. In Panama, you need to go through all this analysis, and only if you are in a very specific set of circumstances do these new requirements even apply to you. If you're wondering if the new 15% tax would apply to any newly formed Panamanian entity you're considering, or if it even applies to your existing Panamanian entities, then we stand ready to assist, to clarify, and to help you. Rothbardgroup.com. We'd be delighted to work with you. And see you guys in the next one.